please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First tick is 10,521 and the first tick on the Sensex down just 20 at 34,630.
As the money flow becomes slightly more scarce, it's going into companies where there is more earnings visibility or ability to earnings.
Companies which can compete on a global stage, and that for us as global investors is what we're interested in.
In front of faster turnaround time for MSMEs, apparently wide exemptions have been given.
Financial institutions, as you say, there is a need for capital, both domestic and foreign. So they should certainly be exempted from 29.
The market is doing not very much at all. We're down about 30 odd points, and this week so far has been that way.
A lot of the cement names like ACC, etc. at new 52-week lows. You also had selling pressure come into a lot of the sugar names. Balrampur Chini down about 7 odd %.
Argentina last week, Turkey this week. Global risk off catches bulls off guard as Sensex slides 300, Nifty tumbles over 1%.
The Indian rupee feels the global heat. The currency hits a new 17-month low as foreign outflows continue. The Turkish lira falls 5% on the day following last week's fall of the Argentinian peso.
SBI extends yesterday's gains as brokerages wave a thumbs up to the bank's fourth quarter cleanup act. Management says they expect to cut their gross NPAs by 50,000 crore rupees in FY19.
The government is bracing itself for oil prices to remain stubbornly high for the next 6 months. The law minister says that the government will take a long-term view to provide relief to consumers. Listen into that. OMCs, of course, get battered in trade today.
Metal stocks melt in trade. Index slips close to 4%, led by the likes of Tata Steel, Jindal Steel and SAIL. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about 8 hours of somewhat harrowing trade today in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Gone.
Yes, something like that, yes.
So, bad for bulls, definitely. Over the next 30 minutes, as always, we will summarize the day's action, trading action in 5 top stories. Our experts will answer your questions. Today, we have Geojit Financials, Gaurang Shah, and technical expert Ashwini Gujral to look at both fundamentals and charts and answer the questions that you send our way. Gentlemen, thanks very much, both of you, for being here. But before we start the Q&A session, let's quickly wrap out the day's trading action. Subdued, cueless, sort of first half, and then, I mean, enough of it in the second half. Big slide. Lata.
Well, I would actually pin more blame on the global concerns. If you looked at the Asian markets and the European markets, there have been falls of over 1% in most equity markets. And risk is off. Oil is down, metals are down. So all risk assets, even commodities, have felt the pain. And obviously Asian markets have done a little worse than European markets. If you looked at currencies, again, the memory of Argentina. Argentina was always seen as an outlier. But Turkey is not seen that much as an outlier, though it's an Erdogan problem and a domestic one. Even then, it kind of brings home the problem. And let us remember that the difference between the other 4 currencies is only one of degree. I mean, Turkish lira is 5%, but if you look at Filipino peso, Indian rupee, rupiah, and real, even these have fallen year to date fairly significantly compared to their 2017 performance. So, slippery 6 vis-a-vis the fragile 5 of 2013. Not as bad, definitely. I mean, I'm not trying to sound alarmist, but you can see that in the way the stocks have fallen. It is the FII favorite stock that saw the maximum selling. HDFC Bank. By far the best in class in terms of earnings, but that's not where the attack came. The attack came on stocks which FIIs usually own or like to own. And, the expectation, therefore, is that the FII is selling out, and therefore let me sell out before that. Separately, of course, oil companies and metals fell. Oil companies in India, because the expectation is there could be a price freeze and their margins could be contracted so that the consumer doesn't feel the pain, and metals as part of the global fall. Something more stock specific?
I mean, actually, just naming names in terms of, you already identified the sectors. So metals and energy stocks. I mean, actually, public sector enterprises and energy, those are 2 different indices. They'll come up separately. Lots of stocks overlap there, but there you go. The top losing spots there. higher. I mean, the wicks jumped. I mean, some 5 or 5.5%, 6% by close. The PSU Bank Index was the other one, which actually was up about 3%. It's had a pretty good week. And on a day like today, the PSU Bank Index up 3%. That says a story. That there is some buying, which is, of course, coming around. Oil stocks, HPCL, both upstream and downstream. HP, of course, was the big loser. The other downstream one was IOC. And look at ONGC, another heavyweight, upstream, 5.25% cut. We, of course, have been talking about this sector and reasons there. Large cap, other large cap losses, Tata Steel, 6.5% lower. And look at other metal stocks. Vedanta down 6.5%, Hindalco down about 2%. Bajaj Finance, Dr. Reddy's and Indocent over the other large cap losers. SBI, Punjab National Bank of Baroda actually and IDBI stand out as far as the top PSU bank gainers are concerned. In terms of broader market losers, Century Textiles, which saw a deal just a couple of days back. SRF, Berger Paints was around 4.5%. Bajaj Finance, another top tier quality name, that lost about 4%. Steel Authority of India, Motherson Sumi, which reported numbers as well, was down almost about 4.5%. Lata.
Okay, well, with that, let's invite our guests. Ashwini, first coming to you, your comment on the ferocity of today's fall.
See, today what started is a large cap fall now. Wherever people were hiding, Bajaj Finance, Reliance, some FMCG stocks, large private sector banks. Now, you know, the large cap indices are likely to match up with the mid caps, and possibly you'll get fairly close to 10,000 before this, downside ends. So from here, even those safe stocks are likely to fall. But the question is, who owns all of these stocks? So chances are, large institutions, FIIs, etc., they are now bailing out because retail is probably out of their mid caps. So now the next leg, large caps should come off. And similarly on the bank Nifty, again, another leg of expansion has started. So possibly we'll get very close to 25,000, 25,200.
Okay, so large cap selling, as Ashwini describes it, it sets us up for the second headline, which is again, related to markets, global this time though, currencies mainly. The rupee here in India felt the global heat. The currency weakened to a 16-month low, trading at 68.34 against the US dollar as foreign outflows continued amidst a global risk-off. The Turkish lira has been exceptionally weak. It fell 5% following last week's fall of the Argentinian peso. Lata, in a way, all different individual reasons, not coming together. The one common thread may be that the dollar is extremely strong against everything.
The dollar has strengthened and yields everywhere have risen. US yields have risen, of course. The Treasury went to 3.1 US 10-year bond. But Italian bonds, you normally measure them over German bonds, and you have seen those Italian bonds also rise. They are usually a mark of risk aversion. When people are beginning to sell Italian bonds, it's a sign that people are worried about risk. Likewise, there are other signs. You saw the Argentinian peso, and then, of course, you also had a problem in some of the vulnerable currencies. Actually, while Argentina and today Turkish lira stand out, lira also has problems with Erdogan's government facing a lot of issues. It's a political problem as well. But if you looked at rupiah, rand, rupiah, real, rupee and Filipino peso, these also are large current account deficit countries, especially the Filipino peso. The current account deficit is fairly large because of aggressive growth. Philippines is also growing at 7%. So that has also seen a large amount of imports to support that growth, and therefore a widening current account deficit. Indonesia earlier this week had to raise rates so that there is no run on its currency. Therefore, we are part of a global problem as well. And whenever crude rises, India's current account deficit also rises. That makes us a potential candidate for a bit of a sell-off. And just one data, last year in the calendar 2017, I think foreign funds bought some 25 billion of Indian bonds or 20 billion of Indian bonds. This year, they have sold about 4 billion of Indian bonds. So that explains, or that brings in very clearly the amount of risk aversion there is, and therefore there is pressure on the currency, which feeds on itself. Once you know that the currency is weakening, foreign funds also want to book out as quickly as possible in equities where they are making money. And therefore there's a bit of that, but I mean, I don't think that we should put ourselves in that fragile 5 memories of 2013. I mean, crude anyway is not at 120 that
I mean,
it was.
as you say, there are a lot of idiosyncratic individual factors driving, not that it makes
driving
it any
Argentina and Turkey, yes.
Yeah, and maybe some of the others also, I'm not saying it makes it any better, but because it is all happening together, and that may
No, I'm sure there is a common risk aversion and a fear that the cost of capital is rising. That is the common thread, and there is no running away from it. The cost of capital was extremely cheap all the way from the global financial crisis and the quantitative easing. Now it is clearly expensive, and that's hitting the emerging markets first. But maybe we can get more color on it from Alvin Tan, the currency strategist at SocGen, who is joining us from London. Alvin, thank you very much for joining us. Would you say this is a synchronized emerging market currency problem, or Argentina and Turkey are problems of their own?
Hi, I'm glad to be here. There is definitely a general story about EMO weakness, for sure, and there is also a story about particular weaknesses in Turkey, as you mentioned. So, I mean, for example, EM currencies, by and large, have been weakening since about early April, pretty much. And that has coincided, of course, with U.S. bond yields moving higher and the dollar doing better. And in the case of Turkey, there are fundamental reasons, certainly, why the currency is suffering. As you've rightly mentioned, this issue of a persistent current account deficit in Turkey, to the tune of almost 6% of GDP currently. And then on top of this, we've also had a situation where President Erdogan of Turkey, he directly mentioned on May the 14th that he would be taking a more active role on monetary policy. And so this has injected significant political uncertainty, political risk into the currency, and it is actually no surprise that since then the Turkish lira has been the worst performing currency.
Our more immediate problem is, will this translate into an overall emerging market currency or equity sell-off? Should an Indian investor worry?
Right, okay. At this point, we don't think that's the case, because we do think that the move higher in U.S. yields will be capped at about 3.3% in the U.S. 10-year yield. So we're not particularly concerned about that. And on top of this, we are in a situation where the growth momentum in the U.S. and in the world does look, by and large, to be still doing well. So in this kind of global situation, it's a bit more difficult to see a fundamental trigger for a generalized crisis across EM.
All right, Alvin, we will leave it at that. Thank you very much. It's a reassurance that we shouldn't worry about any 2013 kind of syndrome, though it's been somewhat of a nasty jar today across EM currencies and more particularly EM equities. The third headline?
Okay, so let's get to the third one. SBI extended yesterday's gains. The stock ended the day over 3% in the green after brokerages sounded an upbeat note on the bank. The management also told CNBC TV18 that they expect to cut their gross NPAs by 50,000 crore rupees by FY19. Listen in to the management.
25,000 crore is for the corporate. This is the most conservative estimate. And I don't think that even 25,000 crore will slip. But based on my guidance that our gross slippages in the current year will not exceed 2%. So even if I take a worst case scenario that 25,000 crore is NPA and 12 to 15,000 crore is retail NPA, so we are still very much within that guidance. As far as the growth is concerned, right now we have sufficient capital, but our estimate is that we may need around 20,000 crore odd amount.
All right, that's the SBI chairman. Gaurang, there is a question here from a Twitter user. His name is Pawan Kumar. He has 1,000 shares of SBI purchased at 260 rupees a piece. He's asking if he should hold or if he should sell now.
Good evening, Lata, to you and to all. We remain positive on State Bank of India, and I think yesterday I was on your sister channel, post the numbers were out, and we did mention that yes, it looks like, you know, possibly the worst is behind us. There could be some amount of little bit of pain which might be visible for the first quarter this financial year, but whatever tweaks and changes that have been made under the NCLT and as of today in the IBC, our sense is that things should look better going forward from here on. So if you're a long term, continue to hold State Bank of India.
All right. Thanks for that, Gaurang. Do stay on. We will have more questions for you. But for the moment, before we head into a break, let's quickly cut into our sister channel, CNN News 18. For the swearing-in at Karnataka, most opposition leaders have gathered at the swearing-in a show of strength.
Much seen. We saw DK Shivkumar and HT Kumaraswamy coming and joining hands to a lot of cheering from the crowd that we saw. There is a high tea right after this inside the banquet hall in the Vidhan Sauda, for which all of them again will be sharing quite a bit of camaraderie, I'm guessing. And we also had the women folk of the Gowda family, you know, Kumaraswamy's mother, Kumaraswamy's wife, all of them coming here posing for pictures. But of course, the second rung, or the third rung, should I say, is even more interesting. Nikhil Kumaraswamy, Kumaraswamy's son, and H.D. Revana's son, who also is a wannabe politician. He wanted to contest this election. His grandfather did not allow it, but his grandfather, in fact, has said that he will make way for Prajwal Revana, H.D. Revana's son, for the Lok Sabha election in Hassan. He has gone on record saying that.
With us here on Markets Today Talk Back, we've been taking your questions. Ashwini and Gaurang are with us. I mean, they've been answering the questions you've been sending our way. We got through three of the top stories. Let's get to the fourth one. Oil marketing companies and upstream companies as well continue to get badgered in trade. HPCL, BPCL, IOC and even ONGC all closed the day between 4 to 8% in the red. The government is bracing for oil prices to remain stubbornly high for the next 6 months. The law minister says that the government will take a long-term view to provide relief to consumers. Quickly listen into that.
In view of the uncertainty in the crude prices globally, a new sense of urgency has developed. The government is keen that instead of having an ad hoc measure, it may be desirable to have a long-term view which addresses not only the volatility but also takes care of the unnecessary ambiguity arising out of frequent ups and downs.
Okay, we don't yet know what is the long-term plan, but the market very much fears that marketing margins of oil companies, refining companies, could get hit if they are not allowed to raise prices along with the rise in the price of their raw material. So a question from one of our viewers, Abhinav Prasoon, has tweeted to us asking if this is the right time to buy HPCL or IOC shares now that their prices are depressed. Gaurang, would you say so?
Well, Lata, it's a difficult situation for the oil marketing companies, and like you rightly mentioned, I think what formula the government is going to come out, we don't know. And in case if the OMCs have to take a hit on their margins, then definitely that may be a concern short to medium term. Having said that, we have a hold recommendation on HPBP, IOC, all three of them. And let's see how far the crude oil boils in terms of per barrel prices. But till such time, I think there is a lot of, there's no clarity, Lata, let me say that. So if you don't want to get into this oil marketing companies as of now because of the confusion, I think FMCG sector would be a preferred, investment idea. And over there, maybe something like a Godrej Consumer Products is what I would advise. But in case if the investor is the hardcore fan of oil marketing companies, then we have coverage on all three of them.
Ashwini, come in on that point as well. I mean, do you think oil companies, oil stocks are likely to fall more? I mean, also beyond oil, which are the other large caps which will lead the fall if you think the market is headed down?
See, they've fallen enough. Yes, surely they can fall further. But I would look at places which haven't fallen, which till yesterday were making, fresh highs. FMCG, consumer, private banks like Kotak, etc. Similarly, the Bajaj twins, wherever, people are hiding, because still there is no place left to hide. Markets don't tend to bottom out.
Fair point. And with that, we come to the last headline of the day. Metal stocks melted in trade today. The metal index slipped close to 4%. And it was led by the likes of Tata Steel, Jindal Steel and Steel Authority, SAIL, all of which were down between 6 and 7%. Well, a question on that note, there's the Twitter query. Venkatachalam is asking, what's the right price level to invest in Tata Steel? He describes himself as a long-term investor. Gaurang?
So I think, the resolution of Bhushan Steel, Lata, has thrown in much more positivity, and our conviction and confidence has only got reinforced. With Bhushan Steel comes in a huge capacity which is scalable upwards. And we do have a positive coverage on Tata Steel, and my sense is that this correction that we saw from 600 plus to maybe sub 550, 540 where the stock closed today is it's a good enough level. Only thing is, phase your investment over a period of time. Don't go and put all your money at one time.
Ashwini, in this market which is headed down, are there any good hiding spots really? Which would those be?
See, the best places to, buy something are things which are going to be there 5 years from now. So like Motherson Sumi fell 5% today. Start doing some sort of SIP, start buying, Nifty Junior ETF, maybe the Nifty ETF as well. Things like, Bajaj Finance, etc. Buy 10% every time it falls. So that by the time the market bottoms out, you are making a decent portfolio. All the rank dogs and cats which ran 10 times over, I think those stocks should be avoided. Stick with quality, because quality tends to come back. A lot of the stocks which went up last year may never come back.